BRICS just made a big decision that could change its economic power. Brazil, Russia, India, China, and South Africa have been working on strategies to reduce reliance on the US dollar, while boosting their own currencies in international trade. This game-changing action has the ability to shake up global financial institutions by offering a viable alternative to the Western-dominated economic structure. The dollar's dominance may be coming to an end, ushering in a new financial era. The dollar's supremacy in global finance is under jeopardy as an increasing number of countries reject it. The BRICS alliance, in particular, is gaining traction, with 40 governments planning to join. This transformation entails not only rejecting the dollar, but also developing a new alternative. Think about what this means for you, your money, and the future economy. Nations such as China and Russia are already trading in their own currencies, with 20% of oil trades no longer relying on the dollar by 2023. It's a risky move that suggests countries are ready to rise up and reclaim their economic independence from the dollar-based system of the United States. The BRICS alliance, consisting of Brazil, Russia, India, China, and South Africa, is emerging as a formidable force in global finance, with the potential to threaten the World Bank and IMF's supremacy. With Russia pressing for member countries to trade in their own currencies rather than the US dollar, this shift could result in a huge financial revolution. Egypt, Ethiopia, Iran, and the UAE have recently joined BRICS, which now accounts for 35% of global GDP and nearly half of the world's population, with the New Development Bank, NDB, supporting these economic endeavors. The NDB is designed to support development projects, marking a significant turn in international finance. Furthermore, BRICS has taken unprecedented moves toward altering the global financial environment by establishing a $100 billion reserve currency pool. Since KVKTH became president in 2015, the New Development Bank, NDB, has quickly expanded itself, making partnerships and issuing its first green bond in 2016. It has also launched emergency funding in response to COVID-19 and intends to broaden its reach further. This momentum underscores BRICS' goal of promoting economic collaboration among emerging countries and reshaping global economic governance for a more equitable world. Valentina Matviyenko of Russia stressed that the BRICS payment system will be a key topic at the forthcoming summit. Yuri Ushakov, a Kremlin aide, acknowledged its relevance in attaining the group's goals. The goal is to build an independent payment system that uses sophisticated digital technologies and blockchain to provide convenience, cost-effectiveness, and political neutrality. However, problems may arise as a result of Bitcoin's openness colliding with some BRICS countries' less open financial systems, casting doubt on their willingness to implement blockchain integrity. Bitcoin is now trading at $59,392.77, down 0.42% in the last 24 hours and 2.74% this week. Imagine a scenario in which the BRICS nations no longer rely on the dollar for commerce. This would enable countries such as China and Russia to rewrite global economic laws. The BRICS are gaining traction, boosting local currencies, and even exploring a new currency backed by member countries. This poses a direct challenge to the United States' economic power. The dollar's power is coming to an end, and with each new BRICS member, the global power balance swings even more. Nations are tired of being vulnerable to US economic policies, particularly after watching sanctions against Venezuela and Iran. It is about regaining economic independence, and the stakes have never been higher. The UAE's decision to join BRICS reflects a strategic move towards strengthening international ties, which may have an impact on regional geopolitics. Iran, with its massive energy reserves and military capabilities, contributes significantly to the alliance. Meanwhile, Ethiopia's involvement indicates a reversal in its global alignments, following prior conflicts with the United States. The development boosts BRICS' economic clout, with the group owning more than half of world oil production and posing a significant challenge to Western institutions. As the BRICS continue to rise, may the US dollar's influence in the global economy wane. This movement calls into question existing economic conventions, and it has the potential to change the landscape of international trade and finance. Saudi Arabia's decision to break its long-standing agreement with the United States to sell oil only in dollars has far-reaching consequences for the global economy. The Saudi Crown Prince's refusal to extend this key agreement on June 9, 2024, has opened the door to oil trades in a variety of currencies. This shift has a significant influence on the dollar's role as the global reserve currency. With the BRICS already creating a new payment system to challenge dollar supremacy, we are witnessing a watershed moment that has the potential to alter international banking. This move has far-reaching consequences that could affect economies all throughout the world, prompting many to wonder what the future holds. The global economic landscape is changing dramatically, leading to a decreased reliance on the US dollar. Approximately 70% of Russia's transactions were once handled in dollars, but since the imposition of sanctions, this proportion has decreased substantially to fewer than 20%. Ironically, each new economic sanction from the US drives countries toward dollarization, prompting a search for alternative currencies. The US's efforts to limit China's access to advanced microchips have also resulted in substantial investments in China's domestic industry, quickly closing the innovation gap. This scenario illustrates that sanctions can unintentionally empower nations and signal a declining safety of the dollar. As countries adapt to these changes, the very foundation of US economic power faces substantial challenges. The actions by the US and French governments regarding funding for Ukraine have sparked serious concerns, especially as they seem to contradict international law. A striking study reveals that 94% of Americans and 88% of Western Europeans are in favor of negotiating an end to the conflict. Isn't it puzzling how nearly 9 out of 10 citizens desire peace while their leaders push for ongoing involvement? This disconnect raises questions about who truly represents the public's interests in these critical decisions. As tensions rise, the gap between government actions and public opinion has never been more evident. Russia's sovereign assets in the United States are primarily treasury debt, which is a major issue for global markets. As the US seizes these funds, other nations are becoming wary of investing in US debt. Notably, China, which once held over $1 trillion in treasury bonds, is now offloading these assets in favor of gold. This strategic shift stems from fears of becoming a target of US sanctions. Congressman Macy's insights reveal the potential repercussions of weaponizing the dollar, emphasizing the short-sightedness of such actions. Meanwhile, BRICS is moving forward with its own payment system, hinting at a shifting landscape in global trade. In the 2023 Johannesburg Declaration, BRICS nations took a significant step by committing to increase settlements in national currencies and strengthen correspondent banking networks. This is not just a move, it's a strategic play to lessen their dependence on the US dollar. By developing the Contingent Reserve Arrangement, CRA, these countries aim to create a safety net during currency crises, positioning the CRA as a competitor to the International Monetary Fund, IMF. Meanwhile, the US has been using economic sanctions for decades, recently exemplified by the seizure of $600 billion in Russian assets after the Ukraine invasion. With over 40 nations, including Iran and Saudi Arabia, expressing interest in joining BRICS, it's clear that there's a growing desire to reduce currency risks and sidestep US sanctions. The bond between Russia, China, and Iran has solidified since the Ukraine invasion, signaling a new geopolitical alliance. China provides diplomatic backing to Russia, resisting G7 oil price caps, while Iran continues to engage economically with Russia, exchanging oil for military support. This collaboration is evident through numerous state visits, showcasing their commitment to countering Western influence, particularly in Syria. As they work together to bolster their interests, the dynamics of international relations are shifting, hinting at a stronger united front against Western pressures. What does this mean for global politics? What do you think about BRICS move? We want to hear your thoughts in the comments. If you found this video insightful, make sure to hit that like button, subscribe to our channel, and ring the bell icon to stay updated on all our latest content. See you in the next one.